Alibaba reporting first quarter earnings in the June quarter, missing on revenue but beating on EPS. We're joined now by the CEO of Alibaba, Daniel Zhang. Thanks so much for joining us. I have to ask you first about the macroeconomic environment in China. You have a stock market sell-off, a devaluation of the yuan. How confident are you about the Chinese consumer, Daniel?
We always closely monitor the Chinese economy and consumer behaviors. As we reported this quarter, we have annual active buyers of 367 million. For these hundreds of millions of people, averagely speaking, they make purchase more than 50 times a year on our retail platforms. When we look at what they buy, basically they cover a large variety of the products. They buy for their daily lives, and they come to our platform not necessarily with a very specific shopping purpose, but maybe for lifestyle. So we are confident for the long-term growth of our business. We will continue to closely monitor the Chinese economy and consumer behaviors as a whole.
Daniel, though, there's so many metrics that say the Chinese economy is slowing down, and I wonder how this will impact Alibaba going forward and the investors who've spent so much money on the stock who are now losing money. We saw poor numbers in exports and industrial sales, auto sales across the board. You know, how is this devaluation of the yuan now as the latest issue going to impact Alibaba's business going forward?
Well, as I said, Alibaba has a very clear long-term strategy, and we will continue our long-term growth. And this short-term market movement won't affect our long-term growth strategy.
You've recently invested $4.5 billion in Suning, which is essentially like the Best Buy of China. And you have this new partnership in which you've taken a 20% stake in the company. Jack Ma, a couple of months ago, told me that Alibaba wants to get into brick and mortar. Is this a step towards making that happen?
Our investment in Suning marks our commitment to omnichannel strategy. Together with Suning, Alibaba wants to render the premium service to our consumers, a totally new online and offline integrated experience. As you know, that Suning has over 1,600 offline stores, and they have over 5,000 sales stations. So after this investment, Suning first will have their online operation on Tmall, and they will bring us a lot of selections of new products. And this will benefit for our customers. And their logistics system, which extensively spread over the country, will also open to our merchants. So we will work with them to render the premium logistics services to our mutual clients. And also, customers on our Tmall platform can enjoy the after-sales service in their service station on the ground.
Now, obviously, you're hoping Suning will help you grow in the future, but this past quarter, we did see the slowest growth in 3 years for Alibaba Group. What happened?
Well, this quarter, we continued our growth. And if you look at the GMV, we reported a year-over-year growth of 34%. If we exclude the effect of the suspicion of lottery business, our GMV growth should have been 36%. And on the revenue side, our revenue grew by 28%, and we made very big progress in mobile monetization. And our mobile revenue increased by 255% year over year. So we are happy with our results, and we will feel good about our future.
But Daniel, you also did do a pretty big share buyback as well. Why did you guys decide to do that?
The share buyback program is for the purpose of anti-dilution for a share incentive program.
I see. Okay, thank you. Also, there's a lockup on September 19th. Some of the biggest shareholders include Yahoo and, of course, Jack Ma and Joe Tsai. What can we expect? Will we see a big selling of shares there?
Actually, I can repeat our answer in our earnings call early today. And what we say is that I got the authorization from Jack and Joe, and both of them, they have zero intention to sell the stock of Alibaba, except for their the minimal stock for the social donation, in their fund in social donation.
Daniel, you've also hired Michael Evans. He's a former Goldman Sachs executive as the president of Alibaba. And you said on the earnings call that this is about promoting Alibaba outside of China. What are your plans to bring Alibaba to the United States in a more physical or material sense?
Mike Evans is a proven business leader with very extensive international experience. We are very happy to have him join Alibaba big family. As president of Alibaba Group, Mike will lead the strategy of globalization. He will help Alibaba to expand our business outside China. Globalization will be the core strategy in the coming decades. So we will show our long-term commitment in the globalization.
Daniel, Alibaba stock has just tanked. It hit a new low yesterday, losing so much money. Can you talk about how confident you are about the stock improving or what investors can expect? Because it really is hitting a serious low here, and you haven't even been a public company for a year yet.
Well, as we always said, we manage our business not by share price. We manage our business for the long-term growth, and we feel comfortable for the long-term growth, and we will continue to try to create value for our customers and merchants.
Daniel, looking forward, a slowdown in China is certainly happening on several levels. How are you going to brace Alibaba for a Chinese economic slowdown, and how will you protect Alibaba's business for investors?
Well, as I said before, and we closely monitor the Chinese economy, but we have a very solid user base, and the people buy a large variety of products on our platform, and they live with us on this platform, and they change their lifestyle. So with the young generation, with the huge user base and the merchants in our ecosystem, we are confident for our future growth.
All right, Daniel Zhang, you're the CEO of Alibaba Group. Thanks so much for joining us today.
Thank you.